Well, good morning. This is Tampa Home Talk. Thanks for joining us today in the studio. And we have another great show lined up for you. We were just debating a little bit before the show started about what the definition of insurance is. Because as you know, Adam Talley with Talley Insurance hangs out here with us many, many weeks. And what did you think it was right off the cuff without looking it up?
So without looking it up, I mean, this is after we see the definition.
Different.
I said something different. I definitely said something different, but I was more I guess my description was more how insurance works, but it was pooled money from a group to pay for, a catastrophic event, for like a big event for one person, basically.
Yeah, so that was Adam's definition. What do you think the actual, don't look at it.
Well, my definition is insurance is betting against yourself.
Stop looking at
it. That's my definition of insurance.
So, Pat, you going to take a stab at it? Because we actually looked it up. Only if you didn't look it up.
No, I can't. I can't even talk today. I'm so sad.
What are you sad for?
It's our last show.
It's our last show of 2018. Not forever.
Oh, wait, just 2018?
Only 18.
Oh, okay. Well, I feel better now.
Yeah. As a matter of fact, we're adding another hour next year.
Oh, now I'm really happy.
Not until March, so you're going to have to wait.
Okay, all right.
So insurance, by definition, is the practice or arrangement by which a company or government agency provides a guarantee of compensation for a specified loss, damage, illness, or death in return for payment of a premium. So that kind of ties in very nicely to both of what we're going to talk about today.
Yeah, but what about definition number 2? That lines up with what Adam was saying.
The business of providing insurance, sort of. That?
No. A thing providing protection against a possible eventuality.
Yeah, so that's the
future.
point. Yeah, so that's the point. It's exactly what we're talking about 5 seconds before you rolled in, is the difference. Like most people, when they think about insurance, right, you think about paying a premium to insure you against future loss. But title insurance, on the other hand, is completely different. It insures you against claims in the past. So it's kind of interesting. We've talked about it a little bit before, but we have Pat's hanging out in the studio there, back there at Beasley, but Kurt
all by
Neoff,
myself. Yeah, go on, rub it in. We're
on Facebook Live, so you can watch us. It's all good. I thought we were on Facebook Live. We're not. I totally lied. I'm sorry. Kurt's going to talk about exceptions to title. So I don't know. Most of you guys have never looked at that. Leo, have you ever had a look at that in depth? That title insurance premium when you buy it, or the policy?
Well, yeah, I've had
Schedule
to use
A, B.
I've had to use it one time when I bought on auction. So yeah, I'm very familiar with title insurance.
Oh, and they didn't. It wasn't an exception on the title. That's exactly what we're talking about.
No, the title insurance kicked in, and the bank was trying to unwind a title.
And the title insurance covered it.
Mm-hmm.
All right.
Yeah.
That'll be a great story for today's show.
It's probably the only time title insurance is actually usable.
Well, it's exactly when it's usable. So Kurt Neoff, which is also one of our show partners for Tampa Home Talk, he's with Island Title. They do a great job over there. And, title is one of those things that I think is a little bit controversial, right? People are like, who are you guys? Why am I paying you? What are you going to do? So it's like with most insurance. You don't need it until you need it. But when you think about title, like, what is title, like, by definition, in a real estate transaction?
Title is how the property is held, and when you own a piece of property, you own it in a certain style of title. And the title policy ensures you that title is free and clear. That's really the essence of this. And as you were just mentioning, there are exceptions to title. They're stated in the policy. And anything outside of that, title insurance is going to kick in and cover. So if you have an heir in the back chain, and not necessarily the person that just sold the title, if you have an heir in previous transactions, an heir by that, maybe an undisclosed heir, title insurance is going to kick in and clear that up.
I'm going to break that down a little bit more, because that's title jargon where he says if you have an error in the chain, like that's totally our language. I don't know if anybody else would understand that. Did you follow that, Pat? Do you know what an error in the chain is? Are you following it? Yeah?
Yes.
Okay.
They are HEIR.
Yeah.
If you had a probate or something and there was an aunt or an uncle that didn't get served and disclosed, and they jump up and say, hey, my father who passed away, that property got sold and I didn't get any compensation. That's a major problem, and that's going to cost money, and that's when title insurance kicks in.
When you talk about the chain and title, you go back and search who all and when and how have owned that property. How long are you guys searching back? How long back?
Generally, we go back 15, 20 years and 30 years to marketable title. So we take a long, hard look at the title.
And marketable title meaning?
Marketable title falls under the Florida statute, actually. Anything that happens 30 years prior to that is covered under a marketable title statute. But yeah, we go back 30 years.
Yep. And so your lenders, of course, like Sierra Cricket at the mortgage firm, they're going to always require title insurance. If you paid cash, the seller would likely cover that policy for you.
Right. And lenders, they're not going to lend money unless they get their own policy of title insurance.
Clear title.
That's why there are two issued, an owner's and a loan policy.
I definitely want to talk about that because exceptions is on our list today, Leo. But I think an auction would probably be one of the most pronounced time that you might use title insurance because there are so many things like that can pop up on an auction.
Well, yeah, because after you buy at auction, there's a 10-day period where someone can protest it, and then that can get the money tied up. And then if the protest starts moving forward, then the lawyers all come into the picture to try and figure out who has the actual title. So usually there's some kind of settlement. It all comes down to money at that point, unless you, for some reason, have someone that really wants that property back. But usually if it's an auction property, it's a money issue.
Yeah, and there's a couple different auctions as well. People don't realize there's like absolute auctions, there's reserve auctions, there's a ton of, and there's a big difference in those. Like if it's an absolute auction, you're the highest bidder, you got it. If it's not, and most of them are reserve auctions, it doesn't necessarily mean you're going to get it.
Well, it just depends on what order the auction is selling, what position. If it's a tax auction that's selling the highest position and everyone underneath them gets written out. If it's a primary mortgage, the secondary mortgages get written out except for HOA fees and a condo, blah, blah, blah. It gets really confusing. But ultimately, when you go to auction, you have to know what position you're buying.
Yeah.
And you definitely want either first position or you want tax position.
And that's what they refer to as lien line, right, in the state of Florida? The lien line, everything has a certain order in which they get paid?
Well, everything as it is recorded has a priority, and a first mortgage stands before a second mortgage. And so, for instance, if the first mortgage were to have been foreclosed, the second mortgage gets wiped out.
Right. But, for example, tax liens are superior to all of them.
They're superior to everything.
And I've seen scenarios before, which this is unfortunate, when a second mortgage and a first mortgage are basically recorded at the same time, and the county has shuffled the paper in the wrong order.
Yeah, that's a big deal.
The primary mortgage becomes secondary for positioning, and the secondary mortgage becomes primary for positioning.
Title insurance, there you go.
That's a big deal. Like that's a really big deal. Like you would think, oh, it's just out of order, but no, it's a huge deal.
Yeah, because the order of positioning is the order of filing. So if your 20% mortgage, which is your secondary mortgage, is filed first, that actually trumps the 80% mortgage, which you would think they want first position.
Oh, they definitely want first position. As a matter of fact, I'm pretty sure they're getting title to say that they are first position.
And that's what, if that occurred, that's what your title policy would have ensured, is that was first position.
Yeah.
And that's where they would step in and cure that issue.
It's interesting, too, like when you go to sign your paperwork, and I've seen this in the past, too, not anything that I did, but just, in the long term of either refinancing it or selling one. I saw a lady one time that literally had 2 mortgages. She did like one of these mail away refi type things, got cash out on both. They both thought they were first lien, and they sent her 2 checks basically. Whichever one got recorded first was first, whichever one got recorded second was second. But title has paperwork that you're going to sign that says you didn't do that.
Well, yeah, you are going to sign an affidavit. You're going to sign an owner's affidavit stating that there are no other things of record that you're aware of.
So what happens in that position, Kurt? I know at that point, technically, you're all the way out of it, right? It's now going to the title underwriters. Right. But like, what happens if somebody does that? They do this mail-away mortgage. There's 2 that are getting recorded. One's first, one's second. Now what?
Well, it becomes priority and how they got recorded, and whichever one behind is an inferior position, and we're going to go ahead and litigate it. The underwriter's going to litigate it and figure it out.
Yeah, that's all the fun stuff that happens behind the scenes for title insurance. So if you've ever purchased a home, I know that you've encountered title commitment, and this is the document that talks all about title. The insurer has to disclose everything the seller has lien-wise is on there, any type of defects. And that last page is always going to be your exceptions to title, and those are things that they don't insure. And we'll talk about that. And Kurt, you're probably old enough to remember what some of the younger generations don't, and that's a marked up title. You know what I'm talking about? Mm-hmm. All right, we'll talk about that too when we come back for Tampa Home Talk after the break. You got something burning to say there, Adam? He's just pointing at Leo. All right, watch us on Facebook Live if you want. Pat George is back there watching as well. And tune in on Money Talk 1010, 103.1 FM, 92.1 FM, 1010 AM.
Well, good morning. Welcome back to Tampa Home Talk. And if you want to reach us on our off-air number, that is
813-377-2775. You can call or text.
You can text the word title to
813-377-2775.
377-2775. And this is an exciting show. We're talking about exceptions to title.
It's pretty awesome, not for your respect, Kurt. I know you don't love that, but I love the fact that you made a title claim and you can chime in on the show today because it's exactly what it's for. It doesn't happen very often. Do you know by chance the percentage of people that actually have to make a title claim? It's got to be less than 1%.
Yeah, 1%. But when you make one, it's generally a big deal, and it involves a pretty fair amount of money.
Well, that's why title insurance is so cheap, because you're betting against yourself, and the odds are in your favor.
And you only pay for it one time, because it insures you for past events, not anything in the future, like Adam Talley would.
That's why we have to charge you every year.
That's right.
Well, what's a little different about title insurance is we do an awful lot of work prior to the closing to insure this title.
This
we
is what
search
people
the
don't
title, things of that nature. We employ people to do that. So there's a lot of expense. We're not insuring at all against future events, and so it's different in that respect.
People sometimes, I think, when they go in, they don't even realize, because the title company normally is the one that's going to sign you out, right? They're the gatekeeper of all the funds. Your lender's going to send all your money to title, and you guys are going to be the ones that disperse. So you're kind of like the gatekeepers, really, of the money and all the documents.
We really are. We do two things. We do what we're talking about as an insuring title, and then we also pass the money out, and we ensure that that's done correctly, that things are paid off correctly, and so we do those two things.
So the exceptions to title, because I'm sure if you ever look at this in Reddit, people are like, an exception? Why do I have an exception to title? And in general, there's 4 different standard exceptions for title. Mm-hmm. And it would be facts which are disclosed by accurate and comprehensive survey of the property, which means you have your layout of the property. They're showing you where everything stands, and let's say your neighbor's fence is encroaching on the property. Well, you already know that, because you looked at the survey. You probably signed a copy of the survey, and that's going to be on your exception list, right, Title? Or right, Kurt?
Yeah, it is. And Title, Kurt? No, I don't want
Mr.
that
Title.
name. I don't
Mr.
want that
Title,
nickname.
I like that.
Dr. Title to
Dr.
you.
Title.
The survey one is a little tricky. A lender's not going to lend any money on a piece of property unless there has been a survey performed. They want to know that the house they're insuring is within the lot lines and doesn't go into an easement, a utility easement,
Right.
things of that nature.
So if they're cash and they close without a survey, what's that exception going to look like?
That exception is going to stay there, and so we're not insuring anything with regards to where that house is placed. So if it is in fact in a utility easement, or maybe they added a pool, this is kind of the things you see, and there's a 10-foot utility easement, and 2 feet of that pool go into that 10-foot utility easement. That's a lot of concrete, and here comes TECO or a utility company, and they want to put a new line in. That's a problem.
They have the right to tear out
Well, they have the
anything that's
right
in that way.
to move it, yeah. And generally, you get into fences and bushes and trees, and all that stuff can be replaced if it's within the easement. But if it's concrete, it's coming up, and it's the cost of the owner. So
One of the big ones that we see, especially in new construction, would be construction liens or mechanic liens of some sort where people have not been paid. I bet title insurance is fun on new home construction, isn't it, Kurt?
Well, it is, but it's methodical. I mean, you move through it, and you get releases of these notice of commencements, and make sure that general contractors have signed off in layman's language and been paid. And that's one of the things that we also do, so that these people don't pop up in the past and say, I haven't been paid.
Definitely. And just because it's not in public records doesn't mean it's not a lien, right?
Correct.
So if you guys catch wind, for better words, of something that might affect the title to the property, you guys are usually going to dig into that and find out what that is.
Absolutely, we do. That's what a notice of commencement is. It gets recorded, and it says we're commencing to work on this property, and that sits there for a year. So it expires after a year, but during that year period of time, if we see a notice of commencement, we're going in to make sure that everybody got paid.
And I've had, people ask me different things, and usually this is where if there's not a real estate agent involved and they're just paying cash for something, right? And the seller is doing it and they're kind of doing it on their own, and they'll say, well, do I really need title insurance? Because the seller doesn't want to pay for it. And it's cheap. I'm paying cash. I really don't need title insurance. And, my answer to that was, I guess you don't need it if you don't care if you're out the money and the property. If you're okay walking away from whatever you spent and the property, then you don't need it. But if you're not, then you probably want to get it.
I guess that's why they should come see a professional like yourself to.
Well, I would never ever buy a property without title insurance.
Yeah.
I just wouldn't. Would you?
Vacant land transactions that I've done, I'd say half of them had some kind of issue previously in the title chain that needed to be cured through either quiet title or some kind of other quitclaim deeds and stuff like that. So yeah, on vacant land cash purchases, definitely use title insurance.
And people think a lot of times that it's just, it's this thing you really don't need. It's this little extra expense, but it's probably one of the biggest ones where if you need it, you're really going to need it.
Yeah, back to that same thing, 1%. But when you get involved in it, and if you're going to get legal people involved and attorneys, it gets expensive quick. And the cost of it up front, depending on the price of the property, is maybe a couple $1,000s to put that against a $200,000-$400,000 investment is pretty wise money spent.
Yeah, and like you said, all the attorneys come out if there's something like that going on.
Yeah, you're spending money now, and we just mentioned a quiet title suit. Well, that's not where you just find a person, and that generally is when you can't find the people to cure it. So you have to go into court and get a judge to quiet that title issue. And that's done by attorneys. And again, you're spending a lot of money to do that.
So if you have a problem with title, one of the common questions we get is, do I lose my property to make a claim?
No. That's what we're ensuring when we issue a policy of title insurance. We're ensuring that you own it free and clear of all issues. If a claim arises, we take care of it.
And then people talk a lot about cost. And unlike your business, Adam, where, people could shop several other carriers and they could come to you and you might have the best premium. Mm-hmm. In the state of Florida, you guys are regulated, right?
That's correct.
It's a
set. It's a set fee. It's called the promulgated rate, and it's the same for everyone for the owner's policy of title insurance.
And then this is the piggyback policy. That's another one that we get pretty frequent. People want to know, if my lender gets title insurance for the mortgage, why do I need a separate policy for myself?
The lender's policy only insures the lender if there's an issue. The owner has no coverage. So that's why that's why there are two policies. So the owner needs his own policy.
It's kind of like force-placed insurance.
Sort of, yeah. So let's walk through what that scenario might look like. Okay, if someone got title insurance on their mortgage, but they didn't get a piggyback policy, which would be silly. But let's say they didn't do that for some reason. Now, title would pay off the mortgage, but they wouldn't insure you, right?
Correct, and depending what the issue is, and there could be many issues, but I mean, if let's say you had the survey issue, and you had a pool that was built into an easement, and we had a survey, we read it into the policy, and we have problems there. The loan policy, the lender is covered for whatever issues rise. The owner is just sitting there; he has no coverage.
And so, what does that look like? Like, in an example.
Well, the lender would get paid off by the amount of his policy. Let's say he lent $200,000, and the pool has to be completely rebuilt and all that stuff. The lender's going to get compensated for that. The owner's not.
And they could still have that issue.
They will still have that issue. Yeah, they will still have that issue.
I guess I'm a little confused. If the pool issue, lender gets paid off for the pool, that money goes against the principal and lowers the mortgage.
No, paid off. Like
the lender may ultimately get paid off completely. His loan may get paid off, and he's fine. The owner still sits there with the issue,
but no mortgage at this point.
No mortgage, right?
No mortgage, correct.
Seems like a win. If it's for the price of a pool, you get rid of a mortgage.
Depends on how big that title claim is. That's probably a small example. right? What about if you have something like forgery or impersonation?
Well, to go back to your question, that if the lender were to get paid off, then the title underwriter would then move back against the owner if he didn't get title insurance to get compensated for that issue, for whatever value there is in that property.
So basically, that title company just sues the homeowner.
They would go back if he didn't get title insurance.
That's interesting. I didn't know that. They would sue the homeowner.
Well, they would go.
Okay.
Yeah, I mean, they're not going to just write a check if there's not coverage. If they insure both the owner and the lender, then everybody's covered.
So if they just insure the lender gets paid out, then the title company sues the homeowner.
And the reality of it is your piggyback policy is about $300, right?
Yeah,
It's
I mean,
really cheap.
$250.
It's really cheap.
Yeah, we call it a simultaneous issue.
Right. In the grand scheme of things, it kind of gets lumped in there, but it just makes the most sense.
It's not me.
All right, Pat, if we got questions, let us know what they are when we come back. Our off-air number here for Tampa Home Talk, if you got some questions for me or you're thinking about selling, because I know many of you are, you want to get past the holidays and roll into 2019, we will help get you prepared to sell. You can call me at my off-air number, 813-377-2775. We'll do a room-by-room review and free home analysis for you and tell you what to do to get the most amount of money. Again, just call or text us at our off-air number, 813-377-2775. We'll be back for Tampa Home Talk right after this break.
Well, good morning. This is Tampa Home Talk. I'm here with Katrina. I'm here with Adam, and I'm here with Dr. Title.
Mr. Kurt, with
Kurt,
Island Title.
With Title and Title. Dr. Title.
We renamed you. Is that okay,
That's
Kurt?
fine.
I like Dr. Title. He's an expert in title insurance. We learned that there's no Eagle policies
I know, I don't
during
know
the
where this
break.
came from.
Yeah.
Some of the things that title insurance does insure you on, I'll give you just a couple quick examples, and then if you want to share like a story or an example with each, you can. But forgery and impersonation, that's one, right?
Yeah,
So,
sure is.
like
Sure is.
someone forges somebody's signature, fake notaries, I don't even know. Like, you think we'll have more or less of those issues as we come into e-notarization and that sort of stuff?
Very concerned with the title industry is very concerned with the e-notarizations. That's one of the main things that we insure against is forgery, specifically in the chain of title. And if you think about it, we're sitting here insuring a $200,000-$300,000 deal, and we're going to issue, we're going to send a seller a couple $100,000 by a wire, and we've never seen him. That's a concern. And all the states are going through their laws to get these issues set. I think at this time there's only one state that allows it, and that is North Carolina. It might be Virginia, but
The e-notarization?
correct.
I think Vermont does.
Maybe
Vermont was the first one, I think, to do it.
But there's so much wire fraud. What are they doing to
Yeah.
protect against that? Sent the money to the wrong place.
ton of
Blockchain.
wire fraud.
Blockchain.
They should. Mm-hmm. No, it's a really big concern. I mean, they went from, having cashier's checks, right? And then those were forged and fake checks.
Yeah, which we don't accept anymore.
Right.
We
and
only
no
accept
title
wires.
accepts it.
Yeah.
And they only do wires, and now there's wire fraud.
Yeah, I mean, during my last closing, I wanted to receive one of those big checks the size of this table, just because I've never received a big check before. And they're like, sorry, we have to wire the money somewhere. I'm like, I want a big check. I want an 18 by 24 check.
I think those things
Negative.
cost like $200 or $300.
No, you can get them for like $5 or $6.
Really?
Yeah. I've done the research.
Okay.
I
You're
really
getting
want
ripped
one of
off,
those
Adam.
checks.
Who's your check guy?
Checksplus.com.
Ooh, gotta look at that.
I just made that one up.
So
I
then,
thought so.
Well, I'll issue you a check at the closing. I don't have
I want
any
a
problem.
huge check,
Yeah,
not just a check. I mean, if I'm going to get a check that has
want
six
the
or
super
seven,
size.
6 or 7 digits on it, including the decimal.
Like
point.
Publishers
I want a
Clearinghouse
check. Yeah, I want one of those
size.
checks.
For what? You want to take it to the bank so that you can have some controversy there, and then you'd be like, what do you want me to do with this?
No, the bank will cash it as long as it's got all the stuff on it that it needs. It can be cashed. I mean, originally checks could be cashed literally on napkins as long as it had all the correct information on it. But then due to all this fraud, they've gotten more high tech.
To the napkin fraud scheme
fraud
of
scheme.
1927.
No,
we
but
had
back in the old west, I mean, you can actually just write it on a napkin, take it to that local bank, and they could cash your check. But then they knew everyone. They knew everyone's signature.
I don't want to get off topic,
I'm way
but
off topic
you
here.
totally had to go there.
The Old West?
I did the ancestry thing, so I haven't done the DNA thing yet. But I started reading through my family tree and stuff, and was pulling up old census records. Just incredible. If I was showing my son some back from the 1800s, and when they were doing the census information, they literally have a column for slaves. and it would say like 0 or a dot or 1 or 2, whatever, when they were filling out all the census
So you
data.
found census stuff from before the 1860s.
Yeah, there was stuff from 1700s. It was incredible.
Wow.
Like, it was just, anyway, that'll be a topic.
Well, I
for
always
another show.
wanted to hear, and now that we're off topic, I always wanted to hear in Florida, in where I'm from, the West, they have signs of population on their signs, on their welcome to city signs. They put populations. I always wanted them to do that here in Florida.
They can't keep up.
It's true.
They have to change it like every month.
No, it's just once every 10 years. I mean, we're coming up on a census year, 2020.
They should. That'd be really cool.
We should have someone on in 2020 about census.
I have a question for you. How many people do you think, because we're talking Census Bureau, come into the Tampa Bay area every day?
Oh, the numbers are astounding.
Every day?
Yeah.
Every day. Yeah. Well, how many people? Now, this was just sent out by the census.
This is like Tampa and St. Pete Airport, just commuters, or is this
It
people
said
moving
Tampa
here?
Bay area.
Visiting or moving?
Yeah, moving here.
You have that number, Pat?
Yes, I do.
Well, what is it?
I'd say, can I
wanna
guess?
hear a guess.
Can I guess first? Maybe
Yes, that's what I want.
250?
Oh, no.
No.
right, let's hear.
250,000?
No, 250
250 people.
a day,
Yeah.
because you got to multiply it out.
No,
That's
I
how
was
you
thinking,
get-
like, what, Katrina, we have an edge on this. How many real estate transactions are there about a month? There's about 1,200 real estate transactions about a month?
We've had an influx, a lot more
Yes.
than normal.
So you figure that most of those are going to be people in or moving. So I think there's like 25 to 30 people a day.
Well, I think,
count that.
let's see. That's
it's
close
higher.
on both of your ends. It's 150.
Oh,
Okay.
I say it's
150, so.
higher.
At
You
Price
think
is
it's
Right
higher?
rules, I would have been right, Adam.
well, we're not on the prices right, so.
$1.
That's still a lot of people. When you think about the roads in the Bay Area, 150,
Yeah.
That means we're not selling enough houses, Katrina.
So while we're on topic, want to take a guess what the most expensive home that sold in 2018 in the greater Tampa Bay area was, Pat? And
dollar
where it
amounts?
was? Yeah, dollar amount.
All right, Pat, you
where?
go first.
I'm going to say 12 million.
Nope.
I was going to say 8 million, Bayshore.
I was going to say 7 million, but probably somewhere out in Pinellas, like Clearwater or something like that.
Yep, you're right. The most expensive property that sold was right on Gulf Boulevard in Redington Beach for $6.399 million.
If we're
And then
playing
the-
Price is Right rules, I'm still.
That's
off.
only because Derek Jeter hasn't tried to sell his house yet.
That's
fair
right.
enough.
And the next closest one, and that actually just closed, by the way, on the 4th. And then there was another one at 6.2, and then another one on Gulf Boulevard, 5.1. Those are the most expensive ones. Are over in Pinellas County,
so
the top 4.
Where's your Bayshore one? Is that all? What? That's all the way down the list.
So in Tampa, we had to go. We dropped down to 4.4 million, and that was in St. Andrews Parks, right in Tampa. And then you go back to Tierra Verde, right? And then Hyde Park was up on the list at 4.1 million.
Ooh.
And then Bayshore Plaza. So there's your Bayshore Boulevard. They come in at number 8 at 3.75 million.
But isn't that a
Exchange.
isn't that a condo,
I
Bayshore
believe
Plaza?
it is single family.
Okay.
It's single family. 3.75 million. Let's see what that house looks like. Not a bad little place. Bayshore Place, 5-bedroom, 4-bath.
Oh yeah, I've driven by that place.
Oh, yeah, it looks beautiful. And if you're looking for $1 million plus listing that you would like to buy, please contact Katrina at 813-377-2775. Again, if you're looking, text $1 million listing to Katrina at 813-377-2775.
And we'll go in and comp it out for you. And the interesting thing, the higher you climb up the scale, the more difference of an opinion you will have. In terms of value. So literally you could get 3 different appraisals, you could get 3 different BPOs, and I can guarantee you'll have 6 different values.
And that's why you need Katrina at 813-377-2775, working for you to get that $1 million listing.
So the actual value of the home is not what an appraiser says. It's, by definition,
What the market says.
what a
the
buyer's
market-
willing to
What
pay.
a buyer will pay.
Yeah, 'cause
Yep,
an
what a
appraiser is
buyer
just
will
an
pay. Then, okay, we bounce back to Clearwater, 3.6 million. There's your first condo. It's the most expensive condo sold in the Tampa Bay area. About 4,700 square feet, 3-bedroom, 3.6 million. And then Sunset Park Isles in Tampa, 3.4 million. Then back to Tierra Verde for 3.4 million. Snell Island,
Yep, all the Richie areas.
3.3 million. Hyde Park's pretty high on the list. And you know,
There's no Seminole Heights?
not yet. They're not that high. It's going to be a while. Davis Island's on there too. I'm surprised the most expensive thing in Davis Island for now is only $2.955 million.
That's it. Moving to Davis Island.
I think unless you're Derek Jeter and you can buy 4 or 5 lots all together, it's
Make
kind of
one
hard
big
to.
one.
It's hard to build to a certain size out there.
I mean, the bigger you get and the more unique the home is, the less the buyer pool is, right? I mean, as you start climbing up in that.
So
in
is
those price
title
points.
more difficult on the more expensive homes? Policies cost more money, I would guess.
Well, by that promulgated weight we talked about, that's tied to the price of the property. But no, the title's no more difficult.
And
It's
these
really the same.
Properties don't move hands as much, so probably the title is cleaner and there's less claims on them.
Less transactions, less option for issues.
So is there a certain percentage that you could, use? Say, okay, I have a $300,000 house. Title insurance will cost X amount.
X amount, right?
So what is the
Do
percentage?
you know the promulgated percentage?
Off the top of my head, I don't. I think it's around $450 1,000 is
We
how
used
it's
to know that, but it all
calculated.
auto-calculates
Yeah, it
now.
all auto-calculates now. And,
Excel spreadsheets are ruining our minds.
I know, isn't that the truth?
you go to value of properties. I was in San Francisco over Christmas, and you get a whole lot more in this area. I had to scour the real estate section out there on Sunday to find a property under $2 million.
Oh, yeah. Yeah.
I mean, I had to look hard. There weren't many.
And I'm sure it wasn't necessarily a gem
And it
either.
was not. It was not at all. So
I think
this
Tampa's
area
going
is
to
rich
move that
in
way.
value.
Yeah, it's going to move that way in the near future. We have so many things to offer. There's an abundance of stuff to do. There's no shortage.
Yeah.
I mean, as you know, every weekend you said you either walk or take the trolley, right, Adam? And
Yeah, we're down
same
Ybor.
for
We're
you.
going down Riverwalk. I mean, it's changing. It's pretty awesome to see. I'm excited for where the city's going. It is.
Speaking of going, Katrina, we got good news for next year. Anything in the real estate business?
So if you want to know my opinion, we're going to see more listings hit the market, of course, in January. Our absorption rate right now is about 4%. So by definition, technically, we're still in a seller's market, but we're moving towards a balanced market very, very quickly, which means we have a more even number of buyer to seller ratio, is what it means.
Does that make your job easier or harder?
It makes it more streamlined, for sure. Yeah, I would say, and it cools the market, right? A little bit. Like right now, we've had this influx in price, so a cooling of the market means it's going to slow down just a little bit, and that's kind of what the feds are trying to do with the interest rates. Some people think it's a bit much, right? 4 rate hikes in 4 months. I think I heard Mason chatting about that, and he rants a little bit more than I do about that kind of stuff. I almost called in just to chime in on that topic, Pat.
That would have been a good one.
Yes, it would have been, because what you have to realize is these rates are lower than they've ever been, and they have to increase the rates to ward off inflation and kind of slow things down a little bit. They can't keep going the way that they are, because think about it, if we have another dip or recession, and there's a whole lot of data out there that supports probably whatever view you want to look at, but if they don't increase the rate slowly now, they won't have anything to re-spark the economy later. What are they going to spark it with?
There's
Debt?
no slow. With 4 rates in 4 months is not slow.
It's not slow. That's what I'm saying.
you
Like
say-
it's still the real estate market is still moving at a very, very healthy pace. So I don't think it's anything to be concerned about. Now, if you want to look a little bit further to that, and I'm on record, right, on the air, being this Road to a podcast and everything else, I think we're going to see a little bit of a slowdown closer to 2020. That's what I think. And we'll move into a buyer's market.
That's an
2020.
election year, though.
It's an election year, yep. But I think we'll move into a buyer's market, which means you're going to have a ton more sellers, a lot less buyers.
The wholesalers will be back in force.
Yep.
Buy your house now for cash. 7
Yep.
days or less.
And they'll do it. And, and some of the places that are, and people on the market, the companies, right, like Open Door and all those, they're going to have to change their model too, because right now, their model is, we make it easy for you, we write you a check, you pick the closing date, you move. But homeowners are leaving so much money on the table. I mean, you're still paying, they build into it, it's about 9% total in fees.
Wow.
9%.
And if you'd like to avoid that 9%, you can get a hold of Katrina at
813-377-2775. Call or text 813-377-2775. And, the thing about putting it on the open market is you're going to expose it to every possible buyer. Get the most possible number you can get. All right. It's Tampa Home Talk. We'll be back in a minute.
Well, good morning. You're listening to Tampa Home Talk, where it's all about title, exceptions to title, in an exceptionally priced real estate today.
At least today.
Today is Friday the 28th.
Yeah, you did
No, 28th or 29th?
It's the 28th.
The
Is it?
28th.
Yeah.
Yeah.
All day.
2018.
Let me check my outline. Yeah.
Yeah, this is exciting stuff. I mean, some people think title is boring, but when you need it, it's nice to know that we had a whole hour to discuss when you need and how to use title insurance.
Yeah. So one of the biggest ones, Kurt, I think you know exactly what I'm going to say next, but this is the one that I think probably it might get used on the most, but it's erroneous or inadequate legal descriptions. That's a big one, right?
It's a big problem.
We see this mostly when people are passing around deeds amongst each other, right?
We
And
call them
there's-
kitchen table deeds, and that's when some folks have sat down at a kitchen table and done their own deed, and they just don't know what constitutes a legal description. And if that deed gets filed without a complete legal description, it's worthless. So we have to go back and contact those people and get those re-executed.
What if they're not around anymore?
Well, then we're getting into litigation to get this taken care of,
Quiet
get this
title.
clear up, and then you might end up with that quiet title situation.
And that takes 4 years.
And a lot of time and a lot of money.
Yeah, and where they can really get messy. I mean, if you're in a subdivision, it's a lot and a block and a plat book and page. That's pretty basic. But if your meets and bounds descriptions, they're
north half corner of
difficult
the
to get right.
Southwest corner of
Yeah.
the one.
To the oak tree, to the
Yeah.
wagon wheel, and that there's a lot of mistakes in those. So.
That's one of the biggest ones for sure. And then, Adam, you had a great insurance tip of the day that kind of leads right into next week's show.
Yeah, so tip of the day, and actually we were kind of talking a little bit about this before the show started, is starting out 2019, everybody has their goals and everything. We're going to get into that next week a little bit, but something that's important to do, and it's not necessarily even just requoting and getting other quotes for your home and auto insurance, but it's just sitting down and reviewing the coverages that you do have. Your priorities change over time, and it's good to. And if you never sat down with an agent to have them go line by line
I've
in a
never
policy,
sat down with
and-
an agent and went line by line. What would that look like?
well, you start with the first coverage, which is dwelling coverage. You explain to them how you got it, make sure they're comfortable with that number, and you work your way down. I mean, there's
You know what? That's a great topic for another day.
Yeah.
We're going to plan a whole
There's a
show
lot in
on
there.
that.
Yes,
And
yes.
I'll let you can dissect my policy on the air. Unless
do
Leo
it.
wants to go.
That'd be fun.
I like to dissect your policy on the air too.
Oh, you want to do it too?
That'd be a lot of fun. Let's do
Because-
that. next
Adam's
year.
good at telling you what your insurance is. I'm good at telling you how you can use your insurance to get money.
Which Adam probably will not do.
Well,
The underwriters probably don't want you to do that anyway.
That's why we sell it, is in case you need to use it. So that's why I believe in insurance, because it's there to protect you in case something does happen. So if something does happen, yes, please use it.
I believe in insurance. It's 40% of our revenue.
For sure. But it's one of those things when you need it, you need it. I mean, I have
Absolutely.
teenage drivers. I can't imagine not having insurance.
That's why I'm sure pretty much every single person listening on the radio right now is paying 2 to 3 times more for their auto insurance every year than they are for their
because
their
of the
home.
teenage drivers texting.
Well, not just teenage drivers texting. It's just there's not a single person that's probably seen their auto policy go down in the past couple of years. And if
Yeah.
it has, you're talking $20. You're not talking anything significant.
I've got a client that's actually selling, and she's got MS. She definitely should not be driving, and she's talking about, I think I'm going to start driving again. I'm like, I don't think that's a good idea.
That's for a doctor to discern, I would say.
For sure, definitely, but that was my opinion. That's all it was.
Fair enough.
I know this conversation's great, but I do have to squeeze one listing in.
Let's talk
Squeeze
about
it
it.
in.
It's new. It just went live. It just went live today. 12814 Belvedere Song Way in Riverview, Florida. That's 12814 Belvedere Song. It's 1,800 square feet, 3 bedrooms, 2.5 baths. It is a short sale, and you can scoop this puppy up for $150,000.
Now, that's an interesting property because,
It's a short sale.
well, it's a short sale, and it was a referral by one of our attorney partners. And the interesting thing, when I talked to the homeowner on that particular property, I think somebody literally got the cash for a mortgage. He signed it. It's his actual signature, but he never saw the money. Didn't even know what he was signing.
Wow.
Wow.
Yeah,
taken
he was
advantage of.
Well, he was explaining it to me, and he's like, I think I got hoodwinked. I'm like, what do you mean? And he was explaining this whole thing. He goes, well, a lady came here, and I signed some paperwork, and I was supposed to do a deal, and then I never saw her again. I'm like, well, you do know there's a mortgage on your property, right? There's 2.
Wow.
And that's why the short sales are?
Yep. I
Oh,
think
wow.
so. Yeah, that's part of it. It's not the only reason, but yeah.
You can scoop this property up for 150,000. Well, not us. We don't need this property, but I'm sure one of the 150 people moving here every
Yeah.
day, and part of our 35,000 listeners, they'd love the property like this. I mean,
So-
when you have cheap property like this, you have to jump on it.
Let me tell you some of the challenges that we're having with short sale properties like this, and we'll start to see more of those, of course, in 2019.
Talking them up, not down.
Well, I'm not talking them down. I want to be realistic, right? I'm always going to be real. I'm always going to tell you the truth, right? So we will set, for example, that list price at 150. And what we're seeing right now, the bank's loss mitigation departments have just changed so much over the years, what that looks like, what their role is, what the process is. And so the loss mitigation departments, where if it made sense, they would do the deal and approve the short sale. We're seeing now, we literally have to come in lower to get this thing approved because we know the bank's going to counter anything we give them. So if we start at a higher price and the bank still counters that higher, now we're at a price no buyer is going to pay for that property.
And if you'd like Katrina to represent you in a short sale, text the word truth to 813-377-2775. That's text the word truth to 813-377-2775. Katrina will walk you through the short sale. She will negotiate with the bank on your behalf.
We
for
do.
the sellers
So we have a
and
team-
the buyers, and she has a team ready to help you. Truth.
Well, the-
813-377-2775. Give them heck, Katrina.
Well, the truth is, most people, there's so many details that go into this, and we've got several attorneys that push us these deals, and they literally have dubbed me the short sale queen. I'm like, that's lovely. Yes, thank you. Okay, well, we'll do it. Back in the day, it's all there was.
That's truth at 813-377-2775, representing your short sale interest, Katrina.
Well,
Maywell.
you know what I liked before, like when the market was just starting to go south? I would go into a listing and people would say, oh, I had another agent come and they walked away because they said, you don't have any equity, I can't help you sell. And I'm like, well, there's this thing called a short sale, which nobody knew what it was at that time. And I'm like explaining how it works. And then I was blogging at the time, so I started getting calls from all over.
How does
All
that
right,
influence?
what is that, Pat?
How does that influence title though with short sale? I guess it'd be just.
No different. I mean, yeah, we're going to insure the title. There's negotiations, obviously, that go on, but we don't do those.
So that would be our farewell music for 2018. This is our last show for Tampa Home Talk for 2018. We'll be back
15 seconds.
next year, 2019, with a show. Remember, love where you live, where I'm going to fix it. 813-377-2775. Have a safe, happy, wonderful New Year, everybody.
Don't
Happy
drink
New
and drive.
Year's.
Happy New Year.